let's quickly jump into the HDFC merged entity, declared its results this afternoon. Let's quickly throw those numbers up for our viewers on our screens. How are the numbers looking like, Suyash?
Shweta, I mean, the first draft, it looks like the numbers are largely mixed. If you look at the profit figures are around 9% ahead of the estimates. Profit for the Q2 FY24 current stands at 15,976 crore, whereas the expectation was that it will come around 14,616 crores. And net interest income, which is the difference between interest earned and interest spent, declined by about came in 2.8% lower from the expectations. Net interest income rose to 27,385 crore versus the expectation of 28,187 crore. Now, Shweta, the numbers are largely not comparable with the previous year's quarter, because these numbers also include the figures of HDFC Bank. Last year's number was pre-merger, so it was standalone numbers of HDFC Bank. Now, looking at the other numbers of CNBC, it seems that interest margin has, the gross NPAs have risen on a quarter-on-quarter basis by 65.6%. Now, the absolute figure stands at around 31,578 crore in Q2 FY24, whereas in Q1 FY24 it was around 19,064 crore. Net NPA, the absolute number stands at around 8,073 crore for this quarter versus 4,776 crore in the previous quarter, which is a 69% quarter-on-quarter rise. Now, if you look at the margin, gross NPA margin stood at around, gross NPA stood at 1.34% in this quarter versus 1.17% in the previous quarter. So, a 17% decline as far as gross NPAs are concerned. And net NPAs has also reduced from 0.3% to, has in fact increased from 0.3% in Q1 to 0.35%, so 5 basis quarter-on-quarter rise.
All right, so should that be a right sort of comparison after the merged entity? I mean, let's quickly also get in Amit to talk about these numbers. Amit, are these numbers in line with the expectations? I mean, to draw an analogy of quarter-on-quarter, year-on-year would not be correct, since this is a merged entity and coming up with its results for the first time. But are these numbers in line with what you were expecting?
So I think the result just declared just before we hopped onto the call, so I haven't been able to in depth see the result.
Okay.
But we need to understand that towards the end of September, they already did an analyst call of the merged entity, and they have given the guidance of basically facing some significant challenges with respect to the refunding of the loans because of the HDFC acquisition which they did at the start of the quarter. So I think all these requirements, as mandated by RBI, whether it is meeting the SLR or the CRR requirements, even they have got the priority lending leeway from the RBI. Even after that, I think it's going to be quite challenging for the HDFC Bank in the near term. And it's an over-owned stock in the portfolios of many mutual funds and PMSs. So I think in short term, this could be a problem in the performance of the stock. And as they rightly pointed out during the analyst call last month, also they cited a very hit on the NIMs, net interest margins, due to excess liquidity. There was a drop in return on the assets on the merged basis for both the entities, and there was an increase in the non-performing loans also. So I think a lot of these negatives were already priced in, because the stock was down about 7-8% since September 20th when they did the analyst meet. So my sense is the numbers which have come out today are more or less expected by the market.
Okay. And
now,
yes,
yeah,
please.
Amit, the expectation was that the result this time around will be muted. In fact, in the last 1 month, in the run-up to the Q1 results, HDFC corrected by about 6%, whereas Nifty Bank fell about 3.5%. So do you think most of the negatives have been priced in? Because HDFC Bank stock in the last couple of weeks has been consolidating at around 1530 odd levels or so. So do you expect that, you know, this the kind of movement that we are seeing in the stock is a base building exercise, and from here on perhaps the stock can take off?
No, I mean, I cannot comment on the stock price, but as far as the business is concerned, one can expect that the further negative surprises should be negligible. But I still think that the re-rating is some time away, as bank has to work through the NIMS transition because of this merger and builds its thesis of differentiation, which I think most of the analysts are less certain about in the current environment. There is a reduction in net worth to account for the policy, accounting alignments, dividend payout, etc. So I think there are, I don't expect too many negatives, but I think for the stock to really perform on the stock market, the re-rating has to happen, which could be another, 2 to 3 months, 2 to 3 quarters of.
Okay, so what's your position on the HDFC stock then?
It's a neutral as of now. We don't have a active rating as of today.
Okay.
We are sort of wait and watch kind of a mode into that. We are not recommending any fresh buys, but if any investor has it in the portfolio, they can hold it for a little longer. Uh, but I would not jump to add on to the stocks. Wait for the merger details to fully flesh out over the next couple of quarters and then take a call in this period.